In this video, we are going to talk about the Lvmh stock. So before starting this video, please like this video and subscribe to this channel for our future updates. The stock price of Lvmh Hennessy Louis Vuitton SA declined by 1.18% on Monday, June 28, 2021, from $161.54 to $159.64. The price varied 0.64% throughout the day, from a low of $158.95 to a high of $159.96. Although the price has climbed in 5 of the last 10 days, it is still down -2.39% for the month. On the last day, volume climbed by 53,000 shares, although at a lower price. This could be an early warning sign, and the risk will rise slightly in the next days. A total of 126,000 shares were purchased and sold for $20.04 million. In the short term, the stock is trading at the bottom of a strong rising trend, which could indicate a solid buying opportunity. If the lower trend floor at $157.80 is broken, it will signal a slower rate of rise in the short term, but it might also signal a trend shift. Given the present short-term trend, the stock is anticipated to climb 18.39% over the next 3 months and, with a 90% likelihood, conclude the period with a price between $186.82 and $200.42. In early 2019, I began working for Lvmh Hennessy LV, OTC, Lvmh, the world's largest luxury goods company. I bought more shares throughout the year and stayed with it through 2020, despite the upheaval in Paris and Hong Kong, greater tariffs on European goods in the United States, and the COVID-19 epidemic. For 3 reasons, I'm still bullish on Lvmh. Its business is well diversified, its headwinds are only temporary, and affluent buyers tend to keep spending even when the economy is bad. Many investors seem to concur, and my Lvmh holding has already increased by more than 80%. Is there still opportunity for Lvmh to grow this year? Let's investigate further. Lvmh's profit from recurring operations fell 28% to €8.3 billion, $9.9 billion, in 2020, after rising 15% in 2019. Although the drop appears to be significant, profit from recurring operations increased by 7% year-over-year in the second half of 2020 as some of its key companies rebounded. Lvmh's most important business is on the mend. In 2020, Lvmh's fashion and leather business, which includes Louis Vuitton, Dior, Fendi, Loewe, Celine, and other brands, contributed 47% of the company's revenue. This core business recovered in the second half of the year, with organic growth of 12% in the third quarter and 18% in the fourth. The recovery of the sector began in April in China, followed by July in the United States, indicating that the pandemic only had a temporary impact on affluent customers' buying habits. Because of stricter cost controls throughout the crisis, the segment's earnings from recurrent operations only fell by 2%. Stay-at-home policies are still causing problems. The Selective Retailing Group, which includes Sephora, DFS, and other stores, contributed 23% of Lvmh's revenue. To avoid its disastrous alliance with JCPenney, Sephora shifted its focus to online orders and obtained a new agreement with Kohl's, NYSE, KSS, in the United States, although stay-at-home policies are still stifling demand for cosmetics in many areas. DFS, which mostly operates duty-free shops in airports, downtown Galleria stores, and resorts, struggled throughout the epidemic as worldwide travel dried up. Due to decreased sales, pandemic-related expenses, and a higher mix of lower-margin online sales, the sector ended the year with an operating deficit. However, after the pandemic has passed, Sephora and DFS should be able to recover fast. The perfumes and cosmetics area of Lvmh, which accounted for 12% of revenue, was also hit by the same stay-at-home pressures as Sephora. Its operating profit dropped by 88%, and the company declined to utilize aggressive promotions to promote short-term sales. It still expects newer goods, like as Rihanna's Fenty Skin, to help it recover from the pandemic. Stabilization of the company's other businesses. Lvmh's wine and spirits division, which sells Hennessy cognac and other high-end alcoholic beverages, accounted for 11% of the company's revenue last year. As it merged its acquisitions of 2 wine brands, Chateau d'Esclans and Chateau du Galupet, and marketed more champagne and cognac products in the United States, this business progressively recovered in the second half of the year. However, the company's operating profit dropped by 20%. The timepieces and jewelry division of LVMH, which includes Bulgari, Chomut, Tag Heuer, and other brands, accounted for 8% of the company's yearly revenue. Although the company profited from increased sales in China, its operating profit fell by 59%. The watches and jewelry category has always been a weak spot for LVMH, but the company expects its January acquisition of Tiffany & Company to dramatically enhance the division in 2021. Are there any brighter days on the horizon? LVMH expressed wary optimism for a rebound in 2021. It didn't give any specifics, but analysts estimate revenue and earnings to increase by 25% and 64%, respectively, when the pandemic passes. We should take such projections with a grain of salt because no one knows when the pandemic will stop, but at 35 times forward earnings, LVMH's stock appears to be attractively valued. Based on these considerations, I do not intend to sell my LVMH stock anytime soon. It would be foolish to sell LVMH before its core businesses recover and it merges Tiffany into its watches and jewelry section, as I did during the company's catastrophic collapse last year. I'd also consider buying more shares because the price isn't overly expensive and could benefit from easy year-over-year comparisons throughout 2021. Signals and Prognosis on Tuesday, June 15, 2021. A sell signal was sent from a pivot top point, and it has since declined -3.56%. Further decline is expected until a new bottom pivot is discovered. Furthermore, the 3 months moving average convergence divergence is currently indicating a sell signal, MACD. Yesterday, as prices fell, volume increased. This could be an early warning sign, and the stock should be properly monitored. Positive signals were also sent out, which may have an impact on the near-term course of events. The stock of LVMH Moët Hennessy Louis Vuitton SAW has a sell signal from the short-term moving average, but a buy signal from the long-term moving average. Because the short-term average is higher than the long-term average, the stock has a general buy signal, indicating a good outlook. If the stock continues to rise, it will run into opposition from the short-term moving average at $161.46. If the price falls, the long-term average at about $158.14 will provide some support. A breakup through the short-term average signals a buy, whereas a breakup through the long-term average signals a sell. Stop loss, risk, and support. LVMH Moët Hennessy Louis Vuitton SAW find support around $156.53 thanks to accumulated volume, and this level may offer a buying opportunity since an upwards reaction is likely when the support is tested. The stock tends to have highly controlled fluctuations and good liquidity in general. In this stock, the risk is deemed to be quite minimal. The stock changed $1.01 between high and low in the previous day, or 0.64%. The stock has had a daily average volatility of 0.89% over the last week. Is the shares of LVMH Moët Hennessy Louis Vuitton SAW a buy? We believe that some of the signals, indicators are unfavorable, and that this will have an impact on the development in the coming days and possibly weeks. However, we believe that the price will rise during or at the end of this 3-month period, and that today's level represents a possible purchasing opportunity. What do you think about our video? What do you think about our opinion in the last? Let us know in the comments below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.